Hey there, I'm Amy Northard, the accountant for creatives, and today we're diving into the world of stipends and how they can benefit both small business owners and employees. So, if you're interested in learning all about stipends, how to set them up, and their tax implications, you're in the right place. Let's get started. First things first, what exactly is a stipend? Well, in the business world, a stipend is a fixed amount of money that employers use to compensate their employees, interns, apprentices, or trainees. It's typically intended to help them cover specific expenses, such as travel or training-related costs, or even as a way to sweeten the compensation package and attract top talent. Importantly, stipends aren't meant to replace regular salaries or wages. Instead, they're an extra perk that can be distributed regularly or as needed. And the best part, there are no strict rules governing stipend amounts or frequency. Now let's talk taxes. Stipends are generally considered taxable income, but employers don't withhold taxes from them typically. This means that recipients will need to pay income, Social Security, and Medicare taxes when they file their income taxes. If you're receiving a significant portion of your income through stipends, it's wise to set aside around 15 to 25% of your stipend earnings to cover these taxes. However, there are exceptions. For example, stipends for qualified parking fringe benefits might only be taxed if they exceed a certain threshold set by the government. And some infrequent de minimis benefits are not considered taxable income, providing further taxable relief. If you're unsure about the tax implications of your stipend, it's a good idea to consult with an accountant for guidance. Stipends are incredibly versatile when it comes to covering various expenses. I'll put on screen a list of common items that can be paid with stipends. A few examples include cell phone plans, home office costs, internet access, and professional development. In addition to these standard stipends, some specific sectors might offer stipends for other purposes, such as academic research or for clergy members. If you're an employer considering setting up stipends, there are several ways to go about it. Regardless of your choice, it's essential to have a clear written policy outlining who is eligible, the amount, and the frequency of stipends. Communication is key here, so ensure your employees are aware of the stipend plan. And of course, maintain accurate financial records for all stipend payments. The three most common ways to set up a stipend are a lifestyle spending account. This option allows employees to use stipend money flexibly for lifestyle and wellness expenses. Financial institutions often offer LSAs with software to help track spending and set parameters up front. The next is processing via payroll. For a more traditional approach, you can add stipend payments as a separate line item on your employees' paychecks. Ensure proper categorization and consult with an accountant or IRS regulations for tax withholding guidance. The third is a one-time payment. If you're considering a one-time stipend, simply issue a separate payment to the individual you're compensating. In summary, stipends offer small business owners flexibility when compensating their employees and can be a creative way to attract and retain top talent. If you're interested in implementing stipends, collaborating with an accountant is a smart move to determine the best approach for your business. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more informative content. If you have any questions or topics you'd like us to cover in future videos, please feel free to leave them in the comments below. Thanks for tuning in, and we'll see you in the next video.